All right, traders, I am back again with another video, and this time I want to take a chance to show you exactly what I send out to my members every time we look at a trade. We don't call it a trade alert, we call it a trade setup because we learn how to trade these setups and then we trade them. I don't need to really even tell you these levels or what we're looking for, but this is the way that we do it. Now we got a good way to show traders and teach traders how to learn the setups, and then when I send out a trade setup, they know what to look for and when to take the trade. So if I show you an entry level or a stop loss and it doesn't work out that way, but it's still in progress, then you know where else you could get that trade. So sometimes trade setups or even trade alerts don't trigger at a good spot. So a trade alert would just trigger at this level that I have here, but a trade setup, you may get a better setup than what I'm showing you now, depending on what price does. And then if you understand the setup, then you could get a better position. You could probably get a better entry than what I'm showing you. Now that's not always the case, but that's what you see a lot of times. So that's why I like to say it's a trade setup, because we already know the setups just from the course that we do. So from our courses and from, the forum and all the chat room and talking and conversating, we all understand the setups. So now when we see something happening with price and with levels, and with our signal and then with our trigger, that's what we do. We get into the trade. So I'm giving you a level that I'm looking to get into the trade. Now that could change depending on what price does. So therefore, that's why we call these trade setups, because you don't have to take the price trade at that level, because you could get a better setup than what's shown here today. All right, and then if it doesn't work out, once it goes above our stop loss, if price never triggered us, then we're going to change our view and wait for a new setup or wait for a new price action and for a new level. We need, basically what we need is a level. So we always have our levels. We need a signal, and then we need a trigger to trade. And we trade just a few things. We trade rejections, indecision, and inside out trading. So inside out trading would be if we have something boxed in and we just trade outside of that box pretty much. So there's a lot of reasons why we box things in, and why we box the market in, or we box the level in. And then we have different levels that we look at. And one of them right now today is what I'm going to show you when we're looking at this Swiss franc yen trade. So I'm looking at basically the daily time frame. So this is a daily time frame setup here. So I want to pull this in a little tighter, let you see what we're looking at here. All right, so you see, first of all, price was in an uptrend. It looks like we're starting to get a little nice downtrend here. Now I'm not sure how far we could go, because I always like to look to the left and find my next support and resistance level, and I like to mark those levels, and that's pretty much where I like to trade to. So we're going to take this first target, and that's all we're going to look at for now, because what we're going to look for, we need to get past this level, and then we could continue to trade to the downside. Now if we're going to continue to the downside, I just go over to my left here and start looking for support and resistance levels. So let me see a level that I could look at here. We could look at this level right here as a support and resistance level, quite possibly, if we get down to that point. Okay, so that would be about 108.854. So that could be the next level if we get through this take profit level. So that's a little bit longer term. So let's look at what we have immediately, so we could just start to see what happens when the market opens. And so I was telling my members, when the market opens, a lot of time it gaps up or down here. So if this market gaps up, it'll be a good idea, because we're going to let the market come back down to us, and if it keeps going, then we know that we're not going to catch the trade. So currently our entry level is 112.648. It's a shame that the market currently closed pretty much at that level, so I'd like to see it gap up a little bit, so that we can, if it gapped up here somewhere, we're going to put our entry in the middle of the gap. So if the gap was up here, we'll put our entry in the middle of that, a little bit lower, let the market come down to us, because a lot of times gaps recover and just continue to the downside or to the upside. So we're looking at the Swiss franc yen daily time frame. So when we look at Ichimoku here, we're trading this based off of Ichimoku rules pretty much, and then using a little bit of price action here. All right, so this is all we do mostly all the time. We don't always trade with Ichimoku, because sometimes the market doesn't allow us to because it's so sloppy or so sideways and you just get too many crossovers. But what we're looking here now is you got your first TK crossover right here, which is bearish, and it's inside the cloud, so that's a medium strength signal. So you could see that the market continued to move to the downside. You got a Kumo twist here that's bearish, so you could see the market move to the cloud is angling to the downside. Nice angulation, no thickness. As you could see, when the market was moving to the upside here, the cloud was not thick as it was up here, because now when you got up here you got a lot of volatility. So when you got that volatility, the cloud got thick, but here you didn't have that. You had the market trending nice to the upside. So pretty much same thing here. So we want to see that market continue to move to the downside, so we're going to look for a trade here. Now what we're looking for, this is your basic trend line in the Ichimoku system, and this is your Kijun, the blue line. Then you can see it's flat, the market's going back and forth across it, and then finally the market gives you a drop below it, and it stays below because look at what it did here. See how it couldn't get above that Kijun, and it just stayed below Kijun, right? Well, now we're pretty much at that same kind of, it's doing the exact same thing almost. Kijun was flat here, a strong resistance point. You're inside the cloud, then the market breaks through. Here we're kind of flat. We're not really flat, we just started flattening out for the past 2 days, so you can't really see how flat it is, but it is flat right here a little bit. And you're getting a rejection here, so we want to see the market drop to the downside. It's rejecting this upper level, so you probably see the market drop to the downside. If you see it move to the downside, that's how we want to catch our trade. All right, and with our stop loss up here at 113, 179, and we're shooting for this profit target. Now, like I said, if we could get through that target, then we're going to shoot down here, get down to this level right down here. All right, let me move it in so we could see it. We're bouncing, we're looking to get off of this level right here, which is going to be, what is that level exactly? I don't have it marked there. Okay, it's 108.854. That's what that's going to be. So that'll be our next level if we could get through this point. All right, but this is long-term trading, guys, so you're not going to see this happen in a few days. You might see it get to this level in a few days, but it could take longer to get down to this point because you're going to have a couple pullbacks and whatnot. So if you get to this level, this is where you probably want to take most of your profit, and then depending on how many lots you're trading, you can let this thing run. So if you're trading with about 5 lots, you take 3 off the table, let 2 run, see if you could get to this level. If you're trading with 1 lot, it's pretty hard, so you might just get to this point and take your profit if we get there. So that's what you look at. A lot of different ways you could do things here. Now again, I said this is based off of Ichimoku and a little bit of price action. You got TK crossover bearish, you got the twist is bearish, you got Chiku span is below price, but it's inside this cloud. All right, and then price is below the cloud. So all 4 of those signals are bearish. But now Chiku span inside of the cloud could find a little bit of support at the bottom of the cloud here if it gets to that point, but that would be below our take profit level. So we could get here, and then you may see the market pull back. Now a lot of times I like to look at a 1-to-1 ratio. So what a 1-to-1 ratio is, the market's going to do like an AB equals CD move. All right, so I'm not going to get real deep into that, but that's kind of what you're going to look at basically to figure out sometime where your profit is. So you could use Fibonacci expansion levels and put it in there, and that'll also show you how to get your 1-to-1 ratio. I discuss this more with my students all the time in the forum and on the chat room. So guys, I'm about to end this session, but just wanted to show you guys a trading opportunity. We'll keep it updated, and we'll look at this basic Ichimoku right here. Got my courses and stuff, got a membership site, so if you guys want to become members, just come over to my site. I'm going to show you what the site address is. Boom, you could see it right there. It just appeared all by itself. I don't know how it got there, but it got there. Well, anyway, that's my site, www.fxatOneglance.com. Come on over, join me, check out my site, and if you want to become a member, then I'll be glad to have you, because I like doing this stuff, guys, and I like really trying to teach people how to trade this Ichimoku system. It's not as complicated as it looks, and we add a lot of different things in with it. We add price action with it, we add support and resistance, we add fractals, and we always have our rules. Now, we don't always trade Ichimoku, but that's one of our big things, Ichimoku. Okay, so until next time, guys, hopefully this works out for you. God bless. Have a great one. So long.